Welcome to Futures Now. I'm Jackie DeAngelis. We are coming to you live from the commodity desk at CNBC Global Headquarters. Here to break down the biggest market movers of the day. Here's what we've got on the show. Stocks edging lower today, but Nuveen Asset Management's Bob Dole not only thinks that stocks have more room to run, but a key event in the next couple of weeks could jumpstart the next leg of the rally. He's going to be here to explain. Plus, wheat hitting a year-to-date high today, but one of our traders says the soft ag is still a sell. He's going to give us the trade later on. But first, let's go to the biggest story of the day. Crude oil dropping more than 2% today, hitting its lowest levels since November. Jim Murio and Anthony Grisante are your traders today. Grizz, what do you make of the crude crush today? Why today? I mean, we've seen pressure on oil prices for a while now, but why at one point a more than 3% drop?
Well, there was an article earlier this morning, Jackie, how Libya is up to 900,000 barrels a day in production. That's from 600 just a few months ago. So what they're doing is they're offsetting any production cuts that's coming through OPEC. Also, Nigeria is producing more. I read another report where 6,000 wells have been drilled in the U.S., the highest in 3 years, that are uncompleted. So those are ready to come online. So it's just a plethora of bearish news coming in at once. And then when you get the estimates of the supply numbers today, we're looking for builds in gasoline and in distillate again this week with a small draw in crude oil.
And that's the problem, Jim Murio, right? Even if supply is going up, demand is not going up to meet it this year.
It's odd that we're actually talking about demand, considering we haven't talked about it in so long. But yes, there are things that are coming into conflict with that. You know, the drastic heat on the West Coast, rains on the East Coast. Yes, we're not seeing the demand we have before. So for it to be getting hit right now during this time is significant. But if you look at it, it was the perfect storm for crude a couple weeks ago. OPEC talked about cutting production. We realized that OPEC didn't have the power that they once did for reasons that Grizz just mentioned, plus throw in the U.S. All of a sudden, OPEC realizes that, so they start cheating a little quicker. Well, they actually held it a little longer than I thought they would, but they're beginning to be non-compliant now. So everything is happening to crude at once. The thing that now has me a little on edge is that nobody is talking about anything that's even remotely bullish crude. The rhetoric has just gotten to be very, very loud negative. To me, I think it might be 80-90% over the down move.
Grizz,
Crowded,
so,
yeah,
to your point, when too many people jump on the bandwagon to one direction, sometimes it can be a problem, right?
Absolutely, Jackie. When too many shorts come in the market, it's a perfect time to start buying it, rallying, and forcing them to cover. And, you know, Jackie, the other thing we've talked about extensively on this show is the shale producers down in Texas. We've mentioned how, you know, some of them, or a lot of them, are profitable at $40 a barrel. Well, here we are. $40 a barrel. I wouldn't be surprised if you saw production actually not actually lower tomorrow, but certainly not raising at the rate it has over the last few weeks.
And you brought up the U.S. figures. I was reading an article that talked about Canadian production ramping another 500,000 barrels a day in the next year or two as well. So when you add this all together, we do have, as we like to say on the program, a crude conundrum. So let's get more on this and bring in our next guest, Paul Ciana. He's a technical strategist at Bank of America. Paul, you see oil actually hitting the 3 handle again, which people have just started to say in the last day or so. But you also say it could be a good sign for bonds. So explain that to me.
Absolutely. So this morning we put out a report called Bonds Smile as Oil Cries. And essentially what we've seen over the last few years is when oil prices break down, it tends to fuel a rally in the bond market, and vice versa. If oil prices rally, you know, bond prices can come in a little bit. And that relationship is very prominent over the last few years, and it's happening again right now where it's starting to be on an even larger scale. So the smile that we're seeing in bonds is that double bottom that's formed this year. Bond prices have risen to exceed the peak of that double bottom and confirm that U.S. 10-year yields will likely fall to 1.97%, likely to summer, if not a little sooner even. And oil prices have just accelerated down through multiple support levels. Last week it was 45 and a quarter. This week it was 44.09. It just keeps going down, breaking supports and failing at lower resistance levels. It's the absolute definition of a downtrend. So we see bond prices continuing to rise, the yield markets correcting back under 2%, and I think the WTI crude oil will just be one of those catalysts as it trades under 40, likely down to about $38 a barrel.
Okay, so I understand this is a historical pattern that you've seen, but I just want to break down the logic a little bit here, and bear with me. Is this basically saying with crude coming off, the risk-off trade is coming off the table, people are sort of making a flight to safety, that's why bonds go up? And And would this take
Yes.
stocks with it too when we see crude approaching 40?
I think you can definitely look at this measure in this chart that you have there as a risk-on, risk-off metric, right? If bond prices are going to continue to trend higher as crude prices come down, yes, that is a feeling of risk-off. Now, that could certainly be a poor sign for the energy sector. It could be a rotation out of energy again, back into maybe tech. Last week, our equity technical strategist pointed out that that's what was happening when that tech move happened, right? Energy and banks picked up. However, if oil prices continue to drop, that money that just flew out of tech and into energy may very well go back into tech for all we know.
So we've been watching this market just go up, 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 waiting for some sort of catalyst here. Could the energy market, could oil be it to take us down?
I think it's one of those things that we definitely have to watch. It's really going to depend on how much more the decline accelerates. We get under 40, 39, 38. I think every dollar lower, the beta or the risk of a larger event just increases in investors' minds about how much worse can this get. And that's where I think it could accelerate and possibly could be it. Yeah.
Okay, Grizz, jump in here.
Yeah, Paul, what's the timeline for the 30 handle in crude oil? Do you see it happening this summer, or do we wait for after the summer, after demand season, and it happens in the fall?
I see it happening this summer. We had Memorial Day week. We had a lot of the peak driving season already. We might have July 4th week coming up where, a little more demand comes in. But ultimately, when we look at the seasonal charts and the patterns in them, the peaks in crude oil prices over the last 30 years used to be in August. Over the last 10 years, it's moved back to July. And on different time slices, it's even moved back to earlier than that. So we're almost in July. This is about it. If this is the seasonal strength period for crude oil, imagine when it's weak. Crude oil is just going to plunge.
That's a great point. Grizz, you always say July 4th is the peak of the season, and we are coming up on it. Jim, I know you have a question as well.
Paul, if we see a bounce, as we often do, and many bear markets we see rip your face off bounces, how high would it have to go before it would change your mind on a technical chart?
I remember 45.50 being a pretty key level in crude oil where some of the recent highs were sold. Before we broke down this morning through that 44.09 level, the last couple of days, that attempted to hold the bottom side of that channel. I think oil prices would have to decisively get back up in that channel to say, hey, maybe we're temporarily delaying the inevitable of getting back to the 30 handle. But ultimately, I think 45.50 would be that tactical line to draw and say, okay, maybe there is an issue with this downside.
All right, Paul, great to see you. Thank you so much for your insight.
Thank you.
We'll see you soon. Grizz, let's get straight to it. The crude oil trade here, when I'm looking at, this is July, 42.98.
Jackie, I'm going to be trading the August because July expires today. And you know what? I'm going to play that bounce, Jackie. I'm looking at the August to buy at 42.80. I put in my stop in at 41.90, and I'm looking for a move right in that area where Paul says at $45. And the reason why is because this market is a bit oversold when you look at the charts right now. I am playing that demand for the 4th of July. After that, all bets are off, as Paul said. And also the trade is getting a little crowded, Jackie, on the downside. And I think you're going to hold this level for the next couple weeks. You're going to see this market grind a little bit higher. But I agree with him. After the 4th of July weekend, if you don't see demand for gasoline start to pick up, we're going to head right back down again to that $40 area or the $42 area.
Well, listen, I don't trust Siri, but when I look at my iPhone, it just says rain, 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 rain. Jim.
Yeah, no doubt about it. I agree with the direction. If I had a gun to my head, I would definitely pick higher than lower right now. My objective had been 42 for the last few weeks. We're in that neighborhood now, so it's clearly less attractive to be short than it is long. I would personally wait for a basing pattern and buy it on strength, but I like where Grizz is going for here. Just the bearish rhetoric has just been overwhelming. Something's got to give.
Okay, let's get the risk reward on this trade. Grizz is buying crude oil at 42.80, targeting a move to 45 even, since each dollar in this trade is worth $1,000. He's risking 900 to make 2,200. Okay, let's move on. Talk about the markets falling a little bit today, but the Dow did manage to squeak out record highs this morning. Where are stocks heading from here? Bob Dole is a chief equity strategist strategist at Nuveen Asset Management. Welcome, Bob. Great to see you.
Thank you, Jackie.
Talk to me about the recent market trends we've been observing, the fact that we do continue to move higher from here. And some people think that we're just at the point where we could crack.
Look, we could get a squiggle down at any point in time. We've had many of them, but the basic trend, because the economy's okay and earnings are good, the stock market has moved up. That's a normal pattern that's existed for years and years and years. I don't know why we repeal that now, unless you have something up your sleeve that's going to say we have an earnings problem. I don't see that coming.
Let's talk about all the action in Washington, D.C. A lot of folks are saying there's so much distraction from the core issues. Nothing's really going to get done before the end of the year, and the market has priced that in. Do you think that that's an issue?
Not really. The stock market's up roughly 10% in the first half of this year, and Washington has done almost nothing but disappoint. So this shows the stock market is not about Washington, D.C. That's noise on the side. It's about the economy and earnings, and first quarter earnings, the last recorded quarter, were pretty much off the charts. So I think that's what the market's paying attention to. Hey, look, if Washington can give us a little tax cut somewhere along the line, probably not until next year, that'll be further good news for the market.
Yeah, people will take it. Jim Uriel, jump in.
Bob, I'm not hearing a lot of people talking about the election in Georgia today, and I kind of think it's significant. If the Republicans win that seat, the tax cut that you just mentioned, will the market believe that that's coming earlier, and could that be a catalyst for the next leg up?
Look, the Republicans have to feel the pressure, win or lose in Georgia, to get something on the books before the election next November. Tax cut is key. That's what people are looking for. I don't think the calendar is going to permit them to get anything done until early next year. Lots of toing and froing. They've got to dispose of health care one way or the other. You've got the debt ceiling, the budget reconciliation before they can seriously roll up their sleeves and deal with the tax cut.
Grizz?
Yeah, Bob, does a lot of this market rallying, or some of this market rallying, have to do with the fact that, you know, the 70-year-old retiree, he still can't get 2 to 3% on his CD, so he's forced into the market to try to make up for that. How much of that is a factor now than it was, say, 2 or 3 years ago?
I think it has to be, not just the 70-year-old, but the 60-year-old, the 50-year-old, the 40-year-old. You know the story. It's, you know, I can't get much in cash. Bonds have been okay, but not great. They saw their high last July, and stocks are sort of the only game in town. I hate backing into an asset class. That means weak holders, but we may have some weak holders that just don't know where else to go.
All right, if stocks are the only game in town, Bob, then what's the target on the S&P?
You know, modestly higher. Look, I'd be the first to admit I'm surprised we're up 10%. For the first 6 months. I didn't think we'd get 10% for the whole year. So I think we'll slowly grind higher unless you tell me there's an earnings problem coming.
All right. Bob, good to see you as always.
Thank you.
Talk to you soon. Jim, you're trading the S&P for me. Do you agree we can bump up higher from here?
I do. I agree on a lot of things. I think if it backs up into the 24.36 area, which was flirting with a couple minutes ago, is a spot to establish along with 24.58 as a target on the upside. A stop placed below 24.22 after that. And I agree with Bob. I think no matter if we hate getting backed into an asset class, we just have to realize we're in that asset class. And yes, it's the only game in town, and that's what we have to deal with. And by the way, on this trade too, if we start rallying a little bit and break this formation to the upside, like 24.47 or 48, there might be a stop in trade up there. I'll put it on Twitter if I think it's the right time for it.
Grizz, what do you think?
Jimmy, I hate to agree with you on this trade, but I do right now because, you know, I think that if tax reform doesn't get done before the July 4th recess, I think that's going to be a negative for the market, but I can't ignore what the market has been doing. I've tried to pick tops a number of times, and it's a fool's game to do it. The buyers just keep coming in. I believe a lot of money managers, Jackie, they've been there for 10 years. They've only known this type of market where you have low interest rates, kind of cheap money, put it into the market because there's not many other place to go. I mean, we've been in this kind of market since 07, so 10 years right now. So, yeah, maybe investors need to be re-educated, but why try to step in front of something that's working so well?
Okay, let's get the risk reward on this trade. Jim is buying the S&P 24.36, targeting a move to 24.58. Since each point in this trade is worth 50, he's risking 700 to make 1,100. Okay, moving on. Ask and you shall receive. We love our fans. And we watch Twitter very closely as well. We noticed that many of you have been asking about the soft ags. Wheat hit a year-to-date high today, so we figured that we would take time to trade the crop today. Jim, you've got the wheat trade for us.
By the way, wheat has hit its yearly high in late May through late June, each of the last 3 years. This would be the fourth if it happens too. I think you sell SEP wheat 486 with a target of 470 on the downside. If it trades back up 496, then it'll be out of the range. If you look at the chart, it is coming up to some significant resistance between, let's say, 490 and 495. I think from a technical standpoint, it's time to sell it. Yes, there was a drought in North Dakota, but there are stocks around the world that have been improving as well.
Grizz, your thoughts on wheat?
You know, it's not going to be a gluten-free summer, Jackie. We did mention it here. So, but Jackie, you know, Jim makes a couple of good points. There actually has been a heat wave in France that has, they're the biggest wheat supplier in the EU, and that's hurt their crop. And our crop has had, actually, there's been a crop report out. Now I feel like trading places, but there's a crop report out that was supportive for U.S. prices. But Jimmy makes the best point that there is. There is a lot of supply around the world. Stockpiles of wheat are high in the Ukraine. They're high in the U.S. They're high down in Brazil. So that we could be seeing a peak right now. And I agree that you'd probably want to, this is a case of buy the rumor, sell the fact. And the fact is that there is going to be gluten this summer, people. So you might want to sell
Rich,
the wheat.
by the way, Jackie, so that's what I'm talking about. The last 3 years as well, is that it seems like we worry about the growing season going into mid-June, and then all of a sudden it seems disappointing. Anytime the markets are like pendulums, they swing too far in one direction. I think this has happened here.
Okay, guys, let's go ahead and get the risk reward on the wheat trade. Jim is selling wheat 486, targeting a move to 470. Since each tick in this trade is worth 50, he's risking 500 to make 800. Okay, that's going to do it for Futures Now. I'm Jackie DeAngelis. My thanks to Grizz and Jim Urio for joining us and providing the trades and insight. Meantime, if you missed any portion of the show, head back to the website, futuresnow.cnbc.com. Everything will be there for you. And for the latest headlines and a sneak peek of what's coming up on the next show, be sure to sign up for our brand new newsletter at cnbc.com/Futures Now email. You can find the link to that and real-time trade updates on our Twitter account. The handle there is at CNBC Futures Now. We will see you for the next live broadcast. That'll be Thursday at 1 p.m. Eastern right here, futuresnow.cnbc.com. See you next time.